Government entities and their exemption from corporate tax in the UAE. Within the context of the UAE's taxation framework, government entities represent a distinct category that qualifies for exemption from corporate tax. This exemption recognizes the fundamental role these entities play in executing governmental functions and providing public services to benefit the citizens and residents of the country. Below, we provide a comprehensive overview of the definition, scope, and conditions under which government entities qualify for corporate tax exemption, as well as the scenarios where they may become subject to corporate tax. Definition and scope of government entities. Government entities refer to a broad range of administrative bodies that operate within the structure of the UAE government. This category includes the federal government. This represents the central governing authority in the UAE, encompassing various ministries and federal agencies tasked with national-level policy implementation and public administration. Local governments. Each emirate has its own government structures that manage local affairs in accordance with UAE law. Government departments and agencies. These are subdivisions of the federal or local governments that focus on specific areas of governance, such as health, education, infrastructure, and security. Authorities and public institutions. Entities such as public authorities or institutions created to provide public services, oversee regulatory functions, or carry out specific mandates under government directives. These government entities are entrusted with a wide range of responsibilities, typically falling under the purview of public administration and service delivery. Their activities may include policy formulation, law enforcement, public safety, social services, infrastructure development, and other essential services that support societal well-being and economic growth. Rationale for automatic corporate tax exemption. The automatic exemption of government entities from corporate tax aligns with international norms and practices. Around the world, it is common for governments to exempt their own activities from taxation. This approach is based on the recognition that government functions are inherently non-commercial and aim to serve public interest rather than generate profits. Taxing government activities would essentially involve a circular flow of funds within the public sector, reducing fiscal efficiency and creating unnecessary administrative burdens. Criteria for automatic exemption. A key feature of this exemption is that it is granted automatically to government entities, provided that they meet the requirements stipulated under UAE law. This means no formal application to the FTA is required. Unlike other exempt persons or entities, government entities do not need to apply to the Federal Tax Authority, FTA, to be recognized as exempt. As long as the entity falls within the defined scope and carries out governmental functions, it is automatically exempt from corporate tax. This automatic exemption underscores the unique role of government bodies in maintaining public welfare, enhancing regulatory oversight, and promoting social and economic development. Taxation of licensed commercial activities conducted by government entities. While government entities benefit from a broad exemption for their governmental functions, there are specific circumstances under which they may be subject to corporate tax. This primarily occurs when government entities engage in commercial or business activities that fall outside their typical public service mandate. Conducting licensed business activities. A government entity becomes subject to corporate tax if it conducts a business or business activity under a license issued by a licensing authority. This scenario arises when the entity engages in economic activities that are comparable to those of private sector businesses, such as operating commercial enterprises or providing services for a fee. Implications for licensed business activities. 1. Independent business treatment. When a government entity conducts a licensed business activity, it is treated as a separate, independent business for tax purposes. This ensures a clear delineation between its core governmental functions and its commercial undertakings. The rationale behind this approach is to prevent any distortion in the market and to promote fair competition between government-operated commercial ventures and private businesses. 2. Subject to corporate tax. The government entity will be required to pay corporate tax on the income derived from its licensed business activities. In addition, it must fulfill all related tax obligations, including registering with the FTA for corporate tax purposes, maintaining proper accounting records, and complying with relevant reporting requirements. Example scenario. Consider a government-controlled entity that operates a commercial business, such as a state-owned enterprise engaged in real estate development or tourism. If this entity conducts its commercial activities under a license issued by the appropriate regulatory authority, the income earned from these activities will be subject to corporate tax. By taxing such commercial activities, the UAE aims to ensure transparency, accountability, and a level playing field for all businesses operating within its jurisdiction. Purpose and importance of taxing licensed activities. The taxation of licensed commercial activities by government entities serves several important objectives. Fair competition. By subjecting government-operated businesses to corporate tax, the UAE ensures that these entities do not gain an unfair advantage over private sector businesses that are also subject to taxation. Economic efficiency. Taxing the commercial activities of government entities ensures that public funds are used efficiently and transparently, fostering trust in the government's economic policies. Alignment with international standards. This approach aligns with international tax practices, where governments seek to promote equitable taxation of similar commercial activities regardless of whether they are carried out by public or private entities.